from the Traders Carnival, I have someone with me who needs no introduction. In fact, he is the one who has coined the term Sensex. Mr. Deepak Mohoni joins us from the Traders Carnival. Mr. Mohoni, thanks for taking the time out and speaking with Bloomberg Quint. First and foremost, your experience at the Traders Carnival.
Well, it's a very interesting carnival or get-together. I've been hearing very diverse strategies. And unfortunately, I'm not here for all the days, but what I've seen has been indeed very absorbing.
So from what you've heard, the speakers and the participants who've interacted with you, what's the sense that you're getting? Why does a person want to become a full-time trader?
That is difficult to gauge really, because I think everybody must have their own stories. But I think at some level, there is a underlying degree of a sort of an adrenaline rush which kind of throws people there. They think that you can get into the market and make a lot of money, easy money, because you don't have a boss, you don't have to account for anything. But this is actually a slight mistake many traders make. And if you look at the percentage of traders who emerge with trading as a pure source of income for themselves, the number is not very high.
That's right. Now, 95% of the traders, as we know, do not make money. That is a statistic that
Exactly.
is widely available. But you are of the view, I believe, that a trader should look at his or her trading as a smaller business in itself and run it according to how a business is run.
Absolutely, because if you want to be in the 5%, you have to do something different. And the different bit is actually the boring bit, which is controlling your costs and accepting that the profits are unpredictable. Because at the end of the day, price action has been now mathematically proven to be random. So there is no way that you can conceivably go out there and predict that the stock is going to go up here and therefore I will buy it. The market doesn't work that way. You have to deal with uncertainty. But the one thing a trader has under his control is the cost. The cost for a trader is the loss per trade. Because he sets the loss, a good trader would set the loss at the inception of the trade. And particularly for day traders, this is actually a bit of an advantage because they have no overnight risk either. So they know precisely how much they can lose in the day. So that is the only real edge that a trader has. He can control the losses. The profits are up to random factors which the market will provide him in good quantity.
Any suggestions for the traders or the budding traders, I would say, on how to cut down their losses, where to place the stop loss?
Okay, the stop loss is only a small part of the whole equation. The thing is, any trader going out there first must decide what is his trading capital. But before that, I will also add that if a trader has a job, he shouldn't give up the job. That's a guaranteed source of income. You can find time out to place a trade or two. You can carry your phone to the loo, for example, and do it. But the point is, keep that job. Let the trading itself start earning a lot more, and you find that you need more time for trading. And only then would I ditch a job for trading. Also, savings must go into the stock market as a long-term investment as well, because that's a diverse strategy. It's always paid off in the long run, especially an SIP kind of system, because you get stocks at all prices and in the long term they go up. So these two are musts. Now, having done that, as a trader and having decided on your capital, you have to keep really close tab as to what is happening to the money. Most traders are not doing that. They're looking more at what's happening to the stock, or they get a kick out of the stock making a lot of profit. They have to drop that kind of excitement out of it. And on any one day, this is a rule of thumb which I basically tell people, they shouldn't really find their capital dropping by more than 0.25% on a single day. So even if you have a certain amount of capital, you want to have really tight money stops. I wouldn't talk about stop losses, but money stops. Because your stop loss will determine how much money you can put on the trade. So it's the money stop, how much you would lose on a trade, that is to be kept under control.
And what are some of the, the traits that you look out for to qualify a trader as successful or not successful?
It's not the trades that does it. It will be ultimately keeping the losses small. Just by randomness, a lot of the trades will become profitable, not because the trader is very good, but because the market will reward certain trades. So what the trader needs to do is to make sure that he can get as much profit out of it as possible. And one way out for that is using trailing stops, and not a target. And the stop loss itself will ensure that a loss is limited to a certain value.
Sure. Viewers, what we also have is that we have convinced Mr. Mohoni to give us a demonstration of a particular stock that he's watching out for based on the price action. So what you have on the screen is the intraday chart of Jubilant Foodworks. Now you can see that after opening it has actually consolidated in a narrow range, and Mr. Mohoni thinks that there is an interesting trade available here. Mr. Mohoni, if you can explain the rationale behind this and take us through the chart.
Okay, first of all, it could be any stock. It's not about Jubilant Trade.
Yeah, it's an example that we have selected.
And now
today.
I will just give you a trade setup. As I've just said, price action is random. So I do not know if the trade will be successful or not. But this is a good candidate because it's in a fairly good uptrend. I think if you look at the month's chart, you'll find that it has got a decent gain. It'll be among the outliers. It's in an uptrend going on back from 2017. And currently you can see the stock is going up pretty sharply. So it's gained from 2400 to 2600 in something like a couple of weeks. So that is a pretty high percentage gain. It will be among the better performers in the market. So this is a momentum stock because it is outperforming many other stocks or most other stocks. It will be in the top 10% momentum gainers. So this is a good candidate for making a good move because all of these little moves in between are your intraday trades.
Sure.
So let's see what's happening to it today again.
Yeah. So that's the intraday chart that you have on the screen.
Exactly. So now what you've got is it opened higher and it's still about a couple of percent up. Where do we have that?
It's up about 23 rupees.
So that's a little under 1%.
Yes.
So what we've got here is a trade where you are essentially hoping for a continuation upward at some part of the day. And you've got a narrow range here.
Yeah.
Now for the last hour or two, it's been between 2670, 2680. That's a really, really narrow range.
Yes.
So what this allows you to do as a percentage, this is an extremely small range. Now if it breaks out from here, you place an automatic trade. That means you place a buy stop order above this level. That's about 2680, or you may as well catch those last couple of peaks over here because it's not going to change your trade very much. So let's take it as 2685.
Yeah.
And you put a stop loss here at 2670. That's only 15 rupees. You can take a bigger quantity because of this, because the number of rupees you'll lose per share is only 15, so you can take more shares. And anyway, you're squaring off at the end of the day. Now, two things can happen here, or three things. One is that it goes up as you expect. So then you have a profit. We'll come to how to take that profit. Second thing is it doesn't go up as we expect, or we hope rather, but it goes down below this. So right away, it's triggered off with a loss of 15 rupees a share. So that is fine, as long as the number of rupees you're losing is a very small percent of your trading capital. As I said, you don't want to lose more than 0.25% of your capital on one day.
Yeah.
Now, if it goes up, people like using targets because they're easy to set. But what is better is to use a trailing stop.
Okay.
That means every time it goes up and dips a bit, the point to which it dips, you keep raising the stop there. For people who are obsessed with targets, what I tell them is, look, if it's met your target, place a trailing stop just below your target.
Okay.
So you're getting your target and the possibility of a bigger move ahead.
Yeah.
So that's a typical trade setup. Now, I have no idea what Jubilant will do next, nor does anybody else. But if it does work out, this is the kind of trade you would find.